All right, cool. All right, let's go ahead and get this kicked off, guys. I appreciate everybody hopping on and joining us today. My name is Aaron Leddy. I'm the Director of Coaching and Training here at Results Driven. Today, we brought in the most special guests, Miss Josie. And then you guys want to introduce yourselves? You guys want to introduce yourselves?
And Liz. Hey, guys, we're here with LFG Lending. Thanks for taking the time to chat. I am the owner, Liz Lawrence, and your account manager,
Josie George.
So Josie's actually going to be managing this full relationship. She's going to be your one-stop contact in regards to all of your lending needs for Results Driven's partnership. So excited to kind of go into the weeds of lending products that we have available, how we can help you guys scale and growing that relationship with Josie.
Yeah, I'm excited.
Yeah, I think it was super important to bring them in. I know even specifically yesterday, like on the operations call, we were getting a ton of questions around, people that were paying ridiculous prices for private money. I heard people all the way up to, I think, 18%, something just ridiculous. So I thought, what's a better way to bring them in, talk through, what your guys' products are, how you can help out everybody that's out there. And really the point of today is we want to make this, they're going to walk through all of their products, but we really want to make this very interactive. So if you guys have any questions, feel free to drop them all in the chat. And then whenever we cover certain things, we'll pause up and we'll answer any questions of what anybody that's on here has throughout this webinar. So I'll kick it over to you guys. I know you guys have a presentation that you want to pop up and share. So I'll kick it over to you. And then anybody that has questions, drop them in the chat.
Cool. 1 second, guys.
Go up to the top on that one. Okay, can you guys see everything okay?
Yep, looks good.
Okay, awesome. So again, Josie George with LFG Lending. Liz, she's the owner. And so what we're going to be going over today, just as a little overview, a product of the week post that I post every Tuesday. I'm going to show you an example of a couple of those. Seasoning right now, which is huge and why it's important in the market. And then we're also going to be going over, of course, our products that we have. We have hard money, bridge loans, DSCR, Airbnb financing, and commercial. And a little about me. I actually have a real estate background. I went to college at Otterbein University. I lived in San Diego for 5 years selling real estate, but I'm from Columbus, Ohio. And Liz wanted me to make sure that I added that some personal things about myself too. So I'm actually on a dodgeball team right now. We're not doing great, but it's fun. And I really love old fashions, just like almost every single coach does at Results Driven. So definitely have that in common with everybody.
Yes.
Aaron knows. And I am, again, your results driven go-to lender. So any deals you guys want quoted out, if you just want to give me a call and just go over a scenario and see if it makes sense, that's what I'm here for. So always feel free to utilize me, and I'm here for you guys. Okay, so what we do and what we offer. So we are a lending company, and we actually are solely in the investment lending space with the ability to lend nationally. We shop for the best terms for you. So this is huge. So if you go to a lender who just has in-house products, if they can't do something for you, they're done. With us, we're going to, if one person can't do it, I actually just had a deal like this. One person couldn't do something for them. So we went and found other better terms for them. And that's just the sweet spot. If something doesn't work somewhere, we find a place for you. And ultimately, if it still doesn't work at the end of the day, we found out that it wasn't a great deal for you before you went and saved that or spent that money. So that's just, yeah, if there's a will, we're going to find it for you.
Yeah, we don't say no terribly often. And I will say, if we end up saying no, you should be probably saying no as well to the deal. So just know that us as a broker and us protecting you throughout the process with lending, we're just making sure that this deal looks as sexy as you think it does.
Yes, exactly. And we offer short and long-term products for you, which we'll go over a little bit later too in the post. Okay, so this right here is an example of my weekly product posts that I actually post on the Facebook page every Tuesday. So one, keep a look on this. This one's just a little example of one of them. This one was what affects your interest rate. And I think it's just so good to understand that, because you can have your friend saying, I got a whatever percent interest rate on something. And that might not be what yours is, because every single deal and file in person is different. So your credit score is a huge factor, loan type, your property type, property use, and loan amounts. Does anyone have any kind of questions on what drives your interest rate in a nutshell?
I don't see any questions
There's
in the chat.
Okay, yeah, I was like, there's the chat. Got it. Okay, and this one is huge. So this is one of my posts that I did this week. It's on property seasoning. And again, I cannot stress how much this is changing in the market right now for investment properties. So property seasoning, if you're unfamiliar, it's the amount of time that a property has been owned and had an active mortgage on it.
So
in
in a nutshell, this is the amount of time you have to wait to be able to go off of the current appraised value. So what has happened recently is Fannie, actually Freddie did it first. So Freddie came out with an announcement right at the first of the year stating that they will no longer allow seasoning to be 6 months. So I know a lot of the results-driven students use conventional financing as much as they can while they can, and I support that 100%. Because I say, hey, use your 10 finance properties, utilize that DTI as much as you can until you can't. Because I'm not going to sugarcoat it. Some of the terms and conditions that we offer are higher than conventional. So use those loans as you can. But unfortunately, last week, Fannie also came out with the announcement that they are also extending out to 12 months. So that means from the time that you guys acquire a property, so you guys take it down with hard money, you're going to rehab that property and then hold it as a rental. You currently, to qualify for a refinance on the conventional side, would have to wait 12 months from the day that you purchase before we could close. So I would say, generically speaking, conventional is not an option anymore, as long as that's the structure. Now, a deal that you purchase and there's not going to be that huge gap between what you paid for and what it's eventually going to appraise for, you can still run through those through conventional. But generically speaking, you're going to be leaning a lot more heavily on DSCR financing based on this guideline change.
And I'm also going to be putting a video on Friday on the Facebook post, just to even go more into detail. Thank you. More into detail on this again, and just stress it because it's huge and it's truly changed how everyone's going to be doing. So
to highlight this just briefly, we are 90-day seasoning. We did actually have a lender that would do 0 seasoning. They're doing some product changes right now. I do anticipate in the next 60 days that their product will be available again. But to be honest, 90-day seasoning isn't too hateful. Yeah. If you're going to acquire a property, do any kind of renovation, keep in mind, we close on the 91st day of ownership. So it's not, we start your application on day 90. No, we're going to honestly start your application probably day 60, finish you up on day 91, and you close on that day and can fund that day as well. This is a huge change. Yeah. So please ask away any questions that you guys would have regarding this.
Anyone questions? Okay. Just again, stressing that one a lot. Okay, so onto some products. Put this over here. Onto some products. So this is one of our short-term products. It's a hard money or fix and flip. Those are one and the same. For our product, we can go as low as 90 to 90% LTV, which means you have a 10% down payment of the purchase price. Also the 75% ARV, and we can go up to 100% of the rehab budget. Again, this kind of depends on each file. So these are going to be the best terms that we can get for that. An example would be if we bought a purchase price of $100,000, a rehab of $50,000, your ARV, which is after repair value, would be $220,000. Then your down payment's literally only going to be $10,000 for your closing, which is fantastic.
Yeah, this is pretty much the lowest you're going to see in the market. So there's big differences. So keep in mind, there's 10% of the purchase price. Then there's some people that'll do 10% of costs. So in this scenario, as an equivalent, if it was 10% of cost, you'd be bringing $15,000 to closing plus closing costs. And then it varies from there to even larger down payment. So I know results-driven students are always looking for the lowest down payment option for their fix and flip funds. So we wanted to make sure we highlighted these options for you.
Yes. And minimum credit score for this is a 620, but kind of along the same lines. That's going to give you obviously not the best terms. So we want to have the best, the higher credit score, the better for the best terms. And this one is really cool because we can actually close in 5 days or less. You are going to be paying to close faster, but if it's an option, if this deal cannot, it has to close in a very short period of time, we can get that done for you. The sweet spot is about 2.5 weeks though. That's going to come with the best terms so that we can close your deal with the least amount of money. So if we can get to 2.5, definitely like to try to do that.
And I would say I question often if people are asking for long enough contracts naturally. So I'm not saying every deal is going to fit in that box where it allows you that much time to close. There's plenty of wholesalers on this call right now, so you're all probably looking at me sideways and being like, I don't want to contract that long out. But just know that it's going to allow that transaction to go as smooth as humanly possible. So again, you got a deal that needs to close fast. We got you. You have a little bit more time on that contract. It's only going to improve the terms and conditions for your buyers. And keep in mind, the happier you keep your buyers as a wholesaler, the more likely they're going to come back to you consistently for the deals that you have in play. So just something to keep in mind. As much as you want to get that deal wrapped up and moved on, it's also keeping your buyers as happy as possible.
Aaron, did you have a question?
Yeah, I was going to ask about, so what do you typically see? So the people say that you come into a scenario and you do have to close, like, let's say within 7 to 10 days, like how harsh typically do you see the results from, like you said, the sweet spot's like 2.5 weeks. Like, what do you see? I'm sure that's like a very loaded question, but like, is there like a commonality of what you see if people need to close faster?
Yeah, so you're more than likely going to be at least 10% of cost, if not maybe 15% of cost in that scenario. You're maybe going to be limited to 70% of ARV, and you're definitely probably looking at 12% on the interest rate. So, but keep in mind, I always talk about hard money and everyone gets in, oh, the interest rate's 12%, blah, blah, blah. As you were just speaking recently, like some of the private money is even more expensive than that.
Yeah.
And making sure that that holding cost makes the deal still make sense. If the deal still cost in it, then it's keep moving. And I think too often people are not putting holding costs in there. So definitely something to add to your guys's calculators, making sure that you're paying to the lender over the time that you have that loan. Just make sure that those numbers are being.
Can you guys still hear us okay? My internet
Yeah,
connection.
you're cutting out a little bit. Whenever they submit these applications, do they like, is there like a specific calculator of what, obviously like we have like our deal analyzer, that would like factor in all those things. So whenever they submit a deal to you guys, do they need to submit that with it?
I would love if you in place so our application, our electronic application can flow and get all the information that we need easily.
Okay.
My internet's still okay?
Yeah, it's kind of, it's cutting out a little bit.
Can we connect a hotspot maybe? Keep going and let me know if we should stop and try to figure out a hotspot.
No, I think you're good.
It looks good. 1 second, guys.
Hold on 1 second. They're about to reconnect. We're going to have them reconnect and then Caleb will answer your question with them. I see you guys moving a little bit. All right, there we go.
Back in business?
Hi.
You're back in business. Maybe not.
Should be able to hear Okay, so there were some chat questions too. So I here.
Josie, can you hear me?
I can. Can you hear me?
Yeah.
I'm so sorry, guys.
It's all good.
Okay, let me know if you can't hear me, okay?
All right. I'll put a thumbs up. I'll put 2 thumbs up if I can't hear you. How about that?
Okay, I love it. Okay.
All right. So we had a couple
Is
questions
there,
in the chat.
does it exist that we can do 100% of acquisition? No, I mean, like the bank. If you were the bank, would you want no skin in the game from the borrower that you have in play? 100% acquisition, 100% of rehab, as long as your LTV runs at that 70 or 75, your terms and conditions will get exponentially better. I would say, even if you're a, the stronger the deal is overall, the interest rate drops considerably. We are also a broker, so what we're doing constantly is having conversations with lenders to ensure that. So I don't know anybody that's doing 100% of acquisition and 100% of rehab. Again, think like the bank, skin in the game from the borrower themselves to make that deal make sense. Not yet. Keep you updated with any new lenders that we bring on and the terms and conditions that are.
As many programs as you help connection. Oh, thank you. And it seems like that folks are getting it.
Caleb, would love to chat with you and see who. I mean, again, we work with, on the hard money side, we probably work with about 15 different lenders. And if anything, I'm also out of pocket than the latter. So you may have some one-off, private institutions, but some of those smaller institutions are going to run out of money a lot faster. So you want dependability. When you go to that lender consistently, they're going to be able to fund those deals. So we'd love to discuss some of those programs that are available.
Okay, any other questions? Okay, so this product, so back to, again, we're at Fix and Flip since we had a little connection issue. This is always driven by experience, or I'm sorry, there's no experience needed, but with this one, no first-time home buyers. So I actually had someone who had never even owned a home the other day and asked me if they could just buy an investment property for a fix and flip. However, that's fantastic that you want to build that. They definitely like to make sure that you have still owned a home at some point. So just kind of keep that in mind if you have any friends or if you guys do not personally own a home at this point. And again, rates driven by experience. Experience is determined by the number of flips that you've completed in the last 3 years. So a lot of people just kind of wonder what that experience looks like because lenders are always talking about that. 3 years is your money spot. That's what they're looking at. And obviously the higher the better. So one of our lenders that we actually have right now, they can do the high 8s if you have 25 plus flips in the last 3 years. So again, if you've had that experience, you really get rewarded for it in this field.
Well, and that's a huge factor. I mean, if we are comparing and contrasting private money to some of these hard money terms, because what happens, once you guys go to private money, I would say you don't need this product. And I don't downplay that in any capacity. We're sometimes here to be your backup plan at that point. So once your private money filters out for some reason, maybe they have some life events that doesn't allow them to continue funding with you guys, whatever that may be, we can always be your backup plan. But also with rates in the high 8s, depending on your experience level, I would say I would love to run some of those numbers to see how much more you would be saving on a monthly basis with those kind of terms and conditions. And I definitely know that some of you are working at this capacity of 25 flips in the last 3 years. So definitely jump on a call with Josie and she can run through those numbers for you.
Yeah, absolutely. Any questions on hard money or fix and flips? Okay.
You guys got anything? Drop it in the chat.
Okay, so next, another short-term product is a bridge loan. So this is a short-term loan without rehab. And what this does, it's kind of your saving grace, if you will. If you have a hard money loan, you're not ready to sell the property, and you're looking for a way to not pay prepayment penalties with that product. So again, it's a product that's going to help you continue to, are you having issues with the internet?
No,
Oh, okay.
it's just a Band-Aid, guys. This is just a way for you guys to, in those one-off situations where rehab took longer than expected, hard money is super expensive and you're wanting to toss out into some bridge terms. I would say lower interest rates than hard money, higher interest rates than DSCR. But again, the biggest highlight on here is no prepayment penalties. So just giving you something that has tons of flexibility so you guys can figure out what to do with that product as it sees fit. And that's honestly, we don't do a ton of bridge.
Mhm.
I would say in the last 90 days, have we done a ton of bridge? Yes. Some cities have seen a huge market correction in regards to value. We did feel some of that in Columbus. And so these were products that allowed our flippers to have a little extra time, wait for those market corrections to settle down and get this property sold without any kind of shortcomings.
And I just had someone who was doing a rehab and it took a lot longer and the market was just different from what they thought it was going to be when they actually completed it, and just paying those extensions to the hard money lender just didn't make sense and it was running them dry. So this is just a great way to, the Band-Aid for it.
Yep.
Okay, so long-term financing, we'll get into that. So this is a DSCR loan. So many people ask about this one, so I feel like this is probably going to be like the money spot, and hopefully you guys have some questions about this. It's debt service coverage ratio, and this product, it has no income validation. So if you have tons of properties, your tax returns are wild, we don't care. This is great. We have no W-2s, tax returns, pay stubs. It's just less documentation on
We
this
don't even
one.
care if you're employed.
We
You
do
could be
not.
unemployed, sitting at home on your mom's couch. I don't care. You have the money to close. You have the credit to qualify. You have a cash flowing property. Here's a 30-year fixed mortgage.
Yes, it's
So,
just mainly based on the property. So a lot of people will call me like, what are the terms for DSCR loans? And I'm like, send me a property, send me an actual file of something that looks like it, and we'll go over everything. And this just also comes back to, since Freddie and Fannie are no longer doing 12-month seasoning, this is the loan that you want to do. This is your solution as a DSCR loan, and it's less paperwork. And nobody likes paperwork, so that's pretty great.
yeah, I would say these these loans tend to close in about 2.5 to 3 weeks.
Mhm.
So pretty painless. I jokingly had a conversation with an investor this week, and he was like, do you need anything from me? I was like, no. I was like, we'll close in like 2 or 3 days. He's like, but don't you need something from me? I'm like, no, sir. Like, I mean, that's kind of the cool thing. There's going to be laws where you're like, does LFG need something from me? That's not the case. So a lot of times we ask for as much as possible up front, make that process seamless. And then what we do on every Friday, our processor, Ashley Fuhrer, will send a follow-up Friday. So every Friday is a touch point on where's your file at? What are we waiting for? What's outstanding? So no matter what, if you don't hear from us sooner than that, which would be shocking, no matter what, you'll get that message from Ashley on Friday to give you guys ease before going into the weekend as to where your file's at.
And Jamie, we do lend in almost every single state. It depends on the product, if you will.
No
What
Nevada,
state? Yeah,
no.
like-
So no Nevada, no Dakotas, no Vermont, but
Yes.
otherwise we're wide open for you.
Last year I was looking at a DSCR loan through Vizio. Very curious what yours is.
Typically, our origination cost is 2 points. Sometimes keep in mind, we can always look at, so Tiff talks a lot about buy downs in regards to getting your rate lower.
Mhm.
Keep in mind, you can also look at it alternatively. So say this is a property that you don't plan on having for the next 30 years. Maybe you plan on having it for maybe 5 years, and you care less about the interest rate and more about that upfront origination cost. We can also consider interest rates higher with lower origination costs. So multiple ways of looking at that. And we try to give you at least 3 different lender options anytime we quote you out terms and conditions so that you can consider some of that space between one lender and the next in regards to LTV, which actually leads us into our
Yes.
question. And then Justin will get back with you.
So yeah, we can go up to 80% rate in term refinance and then 75% on a cash out refinance. Best terms are always going to be at that 70% LTV though.
80% at rate
Yeah,
of term, meaning
80%.
we're paying off any outstanding liens on the property. So if we're just paying off the current mortgage and all closing costs, that could be the loan amount up to 80%. That gives you a ton more room, especially with some of these value changes. This will give you a little bit more space. 75% cash out. We did have an 80%. Again, that is the same lender that's going through a little bit of a product change overall. So we hope to have that back available in the next 60 days or less. And again, if you're all rate driven, you just want the best interest rate out there, then I would definitely consider 70%. So in regards to rates, I would say, so purchase rates, you're probably going to be right around like 7 to 7.75. Cash out rate and term refinances, you're going to be around 7.5 to 8. Cash out refinances are going to be between 7.5 and I would say 8.25. All of this driven on LTV, DSCR, predatory, location of the property, some factors. But again, we can get quotes out to you very quickly. So send those scenarios over. Josie can work on those today and have them out to you shortly. Go ahead and explain how DSCR.
Example of DSCR, because I feel like a lot of people don't understand how that's actually calculated. And it's just really good to know also for the income that you're going to be getting for each property. So example that we have down here, $1,000 mortgage payment means that you need a rent of about $1,002 minimum to meet that requirement.
That's 1 times DSCR.
Yeah,
So
that's 1 times
that's the
DSCR.
lowest DSCR we'll consider. So something to consider, even if the deal is thin in regards to cash flow, but maybe you're expecting appreciation or maybe there's other factors in the deal we're not aware of. We can go down to that low of a DSCR.
But again, that sweet spot is the 1.25 times DSCR. So that's going to give you your best terms. And the example is your mortgage is $1,000. They want your rent to be 12,000, or I'm sorry, that'd be a lot of money, 1,250 for that loan.
Does that make sense, guys? Are you
So
guys using
has
DSCR
been
loans?
it's been like the raving conversation that I've seen with everything involving financing right now. So I
Yeah, it's
also
huge.
knew whenever you guys were going to talk about this is typically where all the questions were going to come up. So
Yeah, and just so many people, like we said, are going to have to do this loan because they can't go with Freddie and Fannie loans anymore. So it's really good to understand that.
Yeah, what's the seasoning look like in a DSCR loan compared to? So you're saying that Freddie and Fannie are going to 12 months. So like, what's it look like on the DSCR loan?
90 days. 90
You said
days.
90 days.
Close
Yep.
on the 91st.
Close on the 91st. And Travis, yes, we can do as many properties as you want.
Travis.
What we talk about often is you use the phrase portfolio, which makes me assume that you mean blanketing. Hi. And blanketing loans, I don't tend to recommend only because a lot of our terms and conditions don't change if you decide to blanket multiple properties. So that's factor number 1. Factor number 2 is when you blanket properties, there tends to be a restriction of some capacity as to what you can do when you need to sell or refinance one of those, let's just say 8. So if you decide to sell one of the 8 properties, they're probably going to have you bring actually more to closing than the payoff. There's going to be some kind of loophole. So we try to make it easier rather than harder. Again, it's not going to change your terms and conditions. So something to just make it a little bit more simple.
So for a purchase, 3 weeks is probably going to be your sweet spot for a purchase.
I think it probably get done faster. It's going to be pretty driven, Brian, on the appraisal. So long-term financing still has to get a full appraisal completed. We order those on day 1. So, realistically, let's say you get into contract on a Monday, we have it ordered on Tuesday. You should be able to have your appraisal done by Friday, and it typically comes back in a week. So, can we close in 20 days? Sure. That's not an issue. And then rates again, Oscar, depends on the type of transaction. If we're looking at a purchase, rate and term refinance, cash out. I hate to give it this broad, but between those 3 different scenarios, you're looking at rates between 7 and low 8%. But we can definitely narrow all that down with an individual conversation. Josie will have her Calendly link at the end of this presentation. Highly recommend is scheduling a time with her to go through those particular scenarios so that you can then pick out deals that make sense. Because you have a good point that the rate is going to determine which deals you want to hold on to and which ones you need to let go. A deal, if it doesn't fit in the box, if it doesn't work, just let it go. There's plenty of deals out there for you guys to grab onto once they make sense.
Like that's happening more in the market right now. I've had a couple of people just send me a deal and it just doesn't make sense and letting it go. And not getting attached and realizing that that just was a great thing that we didn't continue with that purchase is,
It's okay.
yeah, it's okay. It happens.
They're like Doritos, they make more, so don't get hung up. They're investment properties, so.
Right now.
Brandon has a question. What about a property we want to purchase, do a little rehab, and turn into a short-term ref?
Airbnb finance is actually coming up.
Yeah, so if you're gonna do rehab on a property, we're always leaning towards short-term financing. So I guess I would have some questions of, can you fund the rehab yourself? Is there gonna be an equity play where the ARV is gonna go up considerably after you do said rehab? We will get to short-term rental
Yeah, we will.
financing
Yes.
options, so we'll talk about that shortly. But generically speaking, Brandon, yes.
You have. Oh, sorry, let me go back up.
Personal characters from everyone listed on the entity, or do you require everyone? So
Depends on
every
the-
lender is different. So
Mhm.
some lenders, and this is kind of a factor as well, is we're here to kind of know those caveats from one lender to the next that you would never know. If you don't ask the question right, to be honest, not anything against some of these direct lender contacts. It's just sometimes you're not asking the right question. We do this all day, every day. So every lender is kind of different about who they pull credit on and who they want as guarantors. So yes, we do have lenders that'll allow for one guarantor. Ideally, that person would have the best credit. We also have ways to, potentially change the entity to allow for less guarantors. But yes, you are likely to be doing personal guarantors. We can do non-recourse. It just costs a lot of money, so I don't recommend it in a lot of cases, but definitely something we can look at.
New purchase ones, money.
100. What's money to table? On a purchase, if you're gonna keep it in its turnkey, you're looking at 20% down. And that's for Brian. So definitely connect with Josie after the call. Let's get some numbers, put on the paper, see what those terms look like, and get that over to you. And then Hillary, 695 asking price, 8plex, and Louisiana fully rented. We definitely have terms for that. So states are not an issue.
And
So
best way to reach out to me, I'll have my Calendly link at the end of this, so you guys can reach out there, or my email as well, just to send over terms, and then I'll send you guys a rate sheet back over.
Yep.
You're welcome.
cool, next one.
Okay, so Airbnb financing. Good thing it was the next one. So Airbnb financing is, everyone is buying Airbnbs nowadays. So it's actually determined by AirDNA, which we have access to. So what a lot of people do when they're looking to buy an Airbnb, potentially, they'll send me over the address. I'll type it into AirDNA. Sometimes it's a little off with how many occupants we have. So I'll ask you questions like that. And then this right here on the slide is actually an example of that. So it's going to show you your revenue that you have, the average daily rate that you could be asking for, and then also the occupancy. What's the average, the rate of people are going to be occupying that property, which is really great to see. Sometimes it is off depending on what that house looks like, but it's really great to see if that's actually a good deal for you at the end of the day. And what else do we put on here?
So we're always going to want to go off of long-term rents first. So
Yes.
let's kind of slow the process down. So you find a property, you want to use it as an Airbnb. Great. Awesome. Love that for you. We will want to try to qualify you based off of long-term rents first. That is determined. So let's say it's a purchase. That's going to be based off of the appraisal that we get back and a report called the 1007. So it's just a way that the appraiser goes out and says, based on the long-term rentals in the area, market rent on this property is $1,800 a month. If we can make your deal work with long-term rent, your terms and conditions are going to be better. Now, that doesn't mean if it doesn't fit in that box, we can't do anything. So that's where this product with AirDNA comes into play. And we can actually, as crazy as that sounds, we can literally go off of this website to qualify you for a 30-year fixed mortgage. So that's your next option. And then one thing to keep in mind as well, on refinances of Airbnb properties, once you have a 12-month history of that Airbnb being in place, that is as if you have a lease agreement in place. So you get all the good pricing, all the sweet spots, etc., if you have an Airbnb that's been active for 12 months. So anybody that has an Airbnb would love to chat with you and kind of tell you all those little sweet caveats that you may not hear about traditionally.
I think the biggest thing too, people long-term rentals, you have someone in there for obviously a long time. You don't have that maintenance and to have people coming in and out and manage it. But it brings you in so much more revenue than a short-term rental brings you in so much more revenue than a long-term rental. So that's why people are trying to go for this right now. It just, you do have a little bit more work that you're doing to get that revenue up at the end of the day with managing it. Any questions on Airbnbs?
We got a question.
So long-term, yeah.
Yes, there are prepayment penalties. You can, so there are different kinds of prepayment penalties, and that's going to be based on the lender that we're picking. But it's either like let's just say it's a 5-year prepayment penalty. It can be 5, and you're going to be paying 5% of. No, not really.
That wouldn't happen often. So you're typically looking at a 5-year prepayment penalty with a step down. If you guys aren't familiar
5, 4,
with,
3, 2, 1.
yeah. So on the first year, if you decide to sell the property, it's going to cost you 5% of the outstanding loan balance. Then it drops to 4 for the second year, 3 for the third year, and reduces from there. So have some conversations with us. So what we try to do is a phrase that I use all the time is we're now an employee of your staff. You didn't know that. You don't have to pay us a salary. Thank God. You don't have to put me on W-2. Like, it's those kind of simplistic things. So ask us all the questions. If you have a property and you're like, there's no way in hell I'm going to hold this thing for more than 2 years, 3 years, whatever the scenario might be, we can then go and find you the best product that fits that mold. Now, keep in mind, anytime Josie sends you a quote, she's going to strive to give you the best terms possible: interest rate, origination costs, LTV, etc. If there's something in there that's like, but I don't like that factor, just tell her.
Some people don't
Just
tell
her.
me, and I'm like, I don't know everything that you guys at your goals are. Every single person is different. Like, somebody was like, I didn't like that prepayment penalty, that's why I didn't call you back. And I'm like, there are other options.
Yeah.
Like, we have other options. I'm just giving you exactly what the best terms are. But if your goal is to not have it, if you know you are going to be selling it within 5 years, maybe we can find a 3-year prepayment penalty for you. So there are just so many different options for you.
There are lenders that are starting to go down to like, so there's 5, there's definitely 3. We're starting to even see like 2-year prepayment penalties, some no prepayment penalties. So what we'll want to do, and this may answer Caleb's question a little bit, is we're going to want to weigh the difference between a long-term finance product, so a 30-year fixed mortgage with no prepayment penalty, or a very short one compared to a bridge loan, because a bridge loan is going to be a balloon payment. So typically no more than 2 years, interest only payments. Caleb, we can definitely jump on a call with you and kind of go through, does it make more sense to go bridge, or does it make sense to do a long-term finance option with no prepayment penalty?
And that's what we're here for. When we jump on a call with you, we're asking you all these questions on what your goals are and what your thought process is, so we can find the best one for you. Because some people will jump on a call with me and they're like, I need Airbnb financing. And I'm like, maybe you don't.
Yeah.
Like, maybe we need to see what these other avenues are. So that's what we're here for too. And we're going to ask you those questions to guide you in that right spot. Okay, so one of our other long-term products is a commercial product. So this is going to be more similar to your conventional product. We can do warehouse spaces, storage units, office spaces, restaurants, single families, multi-units. And these loans do require some income validation. So they are looking at your debt to income ratio, obviously your credit scores as well. This one does require more paperwork. The cool thing with this though, is that you do have a lower interest rate if we do qualify for this type of loan. Right now we're in limited states with the commercial loans. However, we are trying to expand on that. So hopefully we'll be able to offer that and more.
Yeah. So yeah. And I think a little bit of this is going to be driven by you guys. So if this is something, if income validation is something that you can do, we would love to start searching for lenders in the states that you're in.
Yes.
So comment in the box, let us know if this is something that you could qualify for, because as you can see, so we have a lender here in Columbus that helps a lot of our investors who can qualify personally with rates in the 5s. So that's almost unheard of. We'd love to. Texas, let's go. Yeah.
Yes.
So we'll add that to our list. We'll go vet all of these lenders to make sure that you're getting the process that you want, you're getting the terms that you need. It's a smooth transition from DSCR to commercial. But honestly, this is what most of the high level investors are doing. They're switching from DSCR because of those interest rates, going to commercial, shorter terms. But honestly, most of the time, the payment on this 10-year reset, 20-year AM is nearly identical to the 30-year fix.
And the 10-year reset, just kind of back off that if people are unfamiliar with what that means. So you have a 20-year amortization schedule. So instead of a 30-year, it's the 20-year for the life of the loan, and a 10-year reset. So you have, let's just say, a 5.75% interest rate for the entire first 10 years. And then it resets with the market after that 10-year mark. So it only resets one time, which is also awesome, instead of it being an arm, which is going to be not resetting, but changing
Every year.
every year after that arm goes.
Variable. Yeah.
And
We do have a commercial person in Florida, and we're adding to that. So yeah, guys, again, anybody that thinks that they can personally qualify, that they would love to have some of these products, please put your states in the chat board and we'll start actively working on that this week, if not next week. It doesn't take us long. It's just we haven't been chasing after that, more so because we definitely want to, you know, heighten the service that we're giving for results driven, giving you guys everything that you need to be successful. A little of this will come down to the states that you guys need us in, and we'll focus on those first.
And the answer is, if we don't have it now, we will for you, unless it's one of the states that we had mentioned at the beginning of the chat. Okay, so how to contact me. You guys can schedule a call through my Calendly link, which is listed on there. And you can also email me. It's josie@lfglending.com. I can send that out to, I think it's on the flyer as well. If you guys want to take a look at that came out. Yeah, and it's on literally every single one of my posts too. If you guys are on the results driven Facebook pages, which I'm sure you are. And if you don't have a deal right now, you guys still please schedule a call with me. I'd love to go over 2023 goals, kind of see where your head's at, just meet everybody. And I'm excited to work with you guys.
We appreciate the opportunity. Again, these are loan products that I use myself.
Thanks,
So
Travis.
keep that in mind. These are the products that I use personally to grow my portfolio as well. So let us educate you. Let's get into the weeds. Let's figure out how you guys can grow your portfolio. Tiff always has said that she wished she grew her portfolio sooner. So don't wait. Let's start having these conversations. Let's get a plan of action. Because even we ended up buying 12 properties last year. And I think out of pocket costs, we only had like 40 or 50 grand that we left in those deals. So we used the very cliche Burr method and took those properties down, and we're going to continue to try to buy another 12 this year. That is something that is doable by all of you. Just let us know how we can help to give you that guidance on what the moving parts are to make that happen.
Well, we appreciate you guys coming in. If you guys, and to everybody that's on the call too, make sure that these are great questions that you guys are bringing to the table today. If you guys have any other questions, like throw them in the Facebook community, send them out to Josie directly. Like any questions of what you guys have, we'll do our best to find you guys the resources and tools to really just keep pouring value back into you guys. That's why we do these types of things of, bringing in the top dogs of each industry. And that's our commitment here to everybody, to just get you in front of the best possible products, the products that we use, and honestly, the products that we maximize on. I know Tiff's always trying to, what is it? I always joke. It's right around November, December is when Tiffany's like, man, I should have done this with my rentals this year.
She scrambles. She's like, I'm
every
buying
single
everything.
year. It's every single year. So we know how it all plays. So, but yeah, get ahead of it, guys. Maximize the tools, the resources that we've brought in for you guys, and send your deals over to Josie and see what she can do to help you guys out.
Awesome. Appreciate the time, guys.
Excited to work with everybody.
All right.
Thanks
for everybody. Thanks for everybody that hopped on. And if you guys need anything, reach out to us. Whether it's Facebook or whether it's just DMs, just hit us up and we'll take care of you guys. Appreciate everybody hopping on.
See ya.
Bye,
See you guys.
guys.